Hello, I'd like to welcome you to our Cash Flow Cruncher tutorial. My name is Jesse Garcia and I'm a senior coach at VIP Financial Education, and I'm excited to be your coach. We are thrilled to have you as a member of the VIP coaching program. In this video, we are going to prepare you for the coaching process so that you can start making progress as quickly as possible. Our focus today is on filling out the Cash Flow Cruncher. So the only thing you'll need is to have the Cash Flow Cruncher open. Before each coaching session, you'll want to submit an updated version of the budget to me as your coach at least 24 hours prior to each coaching session. Today we'll be going over the various categories of the budget to help you understand exactly what I'll be looking for. The Cash Flow Cruncher will provide several tremendous benefits. First, every student learns differently. I could easily communicate your action steps verbally. However, it's one thing for you to hear me discuss your financial situation. It's another to see it before your eyes. Every student learns differently, just as every coach teaches differently. So having a visual representation of your finances helps us ensure that we meet your specific learning needs. Second, this budget tool serves as a tremendous means of accountability. Initially, you will see some concepts that may look foreign to you. We'll discuss target rates, utilization ratios, and many other terms in a separate tutorial. For now, just know that these ideas will help both you and I better assess your progress. Third, by submitting your Cash Flow Cruncher 24 hours prior to your session, you can be assured that I will be prepared for every session. It's true, we could walk into a session without a budget, ask you some questions, and still help you make some progress. But here at VIP, we want to maximize your results by considering as much information as possible. After all, every coach has a style all his own. So instead of letting us walk into a session blind, you'll want to make sure we have as much information as possible so we can be as prepared as possible. So let's dive in. Let's get started by looking at the Cash Flow Cruncher together. Like any spreadsheet, you can navigate through our system by selecting the various tabs at the bottom of the page. Over in the far right corner of the page, you'll have a zoom feature. This particular program is optimized to be viewed at 70%. However, you can play with this to decide which view is best for you. Also, over to the far left section, you'll see these small arrows. If you have an older machine with limited resolution, or if you have a minimized screen, there may be limited space for the tabs at the bottom of the page. These arrows allow you to navigate through those tabs that may not be in view. The first two tabs are the How to Use the CFC and the Glossary tabs. You'll want to familiarize yourself with these sections since your coach will be referencing them occasionally. The third tab is the Cash Flow Summary. You won't be entering any information here. This information will auto-populate after you fill out the rest of the budget. The only item I'll point out here is the difference between gross cash flow and net cash flow. Net cash flow describes your current cash flow after you service your debts each month, whereas gross cash flow describes what your cash flow would look like if all of your debts were paid off in full. The first priority we have is to make sure that you have positive cash flow. The first question we'll ask you is if this number seems accurate. If the number is not accurate, we'll need to evaluate your budget together more closely. Assuming you are positive cash flow, typically this will allow you to implement more advanced techniques. If the net cash flow shows a negative number, then that means one of two things. Either you are spending more than you earn, or the data entered is incorrect. Therefore, we will need to determine what's causing the negative cash flow. The key here is being conservatively accurate with your averages as you fill out each page. So let's go through those pages one by one. The next tab is the Revenue Assets tab. In the upper center of the page, you'll see a section for your FICO scores. It is possible to use a different type of credit score other than FICO. However, keep in mind that FICO is the only score that most lenders care about. Your coach will give you further instructions about obtaining your credit scores depending on your needs. But even though you should be emailing us a copy of your credit scores and reports, you'll still want to list the scores here in this section. By the way, in most coaching sessions, Your coach will make the changes in the budget for you while you're on the phone together. You'll make changes between scheduled coaching sessions, so don't worry about making any changes to the budget during a session unless your coach specifically asks you to. The first major category in the system is monthly income. Obviously, this is where the various sources of revenue should go. Every single item in the entire budget should be listed as a separate entry. So if you have more than one job, each job will be a separate line item. If you have a side business, then the draw you receive from that business is a separate source of income. If your business has several revenue sources that you draw from, then each source would be a separate entry. If you have several rental properties, each property would be a separate line item, since one property might be vacant while another is occupied. Also, in some instances, commissions, bonuses, or overtime can be considered a separate income source. It just depends on how it's paid out. If you receive it in a separate check, then it may be easier to enter that as a separate line item as well. The next field is the revenue field. This is obviously a reference to how much money is brought in from a specific revenue source. All of the numbers in the budget are calculated based on monthly averages. We're not looking for rounded numbers though. We're not looking for worst case scenarios or best case scenarios. We want to understand the number as they currently are. However, there are several different ways to calculate this. For example, if you're paid bi-weekly, then that means you receive 2 extra paychecks throughout the course of the year. So you want to take your bi-weekly amount, multiply it times 26, since that's the number of checks you'll receive, and then divide that number by 12 to get the monthly average. Similarly, if you're paid weekly, then you would take the weekly amount, multiply it by 52, and then divide it by 12. However, if you're paid once or twice a month, then you're just putting in your usual monthly payment amounts. Now, if your income fluctuates, then we have to account for that as well. For example, if you worked for commissions or were self-employed, then you would add up the last 3 to 6 months' income, then divide that amount by the number of months included in that review period. You can then detail the breakdown of the income numbers in the notes section to the far right of the page. For example, if you made $4,000 one month, $0 the second month, and then $2,000 this past month, the total income for the 3-month period would be $6,000. Then you would divide that number by the 3 months in question to get your monthly average of $2,000. But again, your numbers should be more accurate than just $2,000 a month. The other issue that has to be addressed regarding income is taxes. The best way to account for your taxes is to put them in the expenses tab, which we will go over later. So in this income section, you would put your total gross income, meaning all income before taxes. Then you can list all of your deductions coming out of the paycheck in the expenses page. That includes taxes, benefits, retirement allocations, child support, garnishments, and any other items being taken out of the paycheck. But this number here should be pre-tax revenue. There are a few other things that are helpful to know. Is an item paid weekly or bi-weekly, twice a month, or monthly? Are you W-2'd or self-employed? Are there any changes expected to your income? Do you normally get a refund? By the way, if you do get a tax refund, you may want to consider contacting a tax professional to discuss adjusting your deductions and withholdings. Basically, you're lending money to the government each month only to get it back at the end of the year without any interest, whereas you could be taking your money and applying it towards your debt to get a guaranteed rate of return in the form of interest saved. The next category is investments. Obviously, this is a reference to certain types of investments such as stocks and bonds. The first field in this section says account name. You're going to see that field in various places throughout the budget. However, I just want to make it clear that under no circumstances should you be putting specific account numbers. This page here is merely a budget tool that should only contain basic information so that there is no confusion while discussing the information over the phone. You may include the last 4 numbers of an account number if you have several accounts with the same institution, but primarily we just need enough information to understand how the account works. So you could list the portfolio manager, the creditor or lender, or the banking institution. So in this field here, you could put Charles Schwab, TD Ameritrade or E-Trade, something like that. You'll also want to identify whose name is attached to the account or if it is held jointly. It's also helpful to identify the account type, such as mutual funds, stocks, or bonds. The next field is the revenue field. Now in the monthly income section, this had your income numbers. However, in most instances throughout the budget, this will usually be left at 0. Revenue relates to the money that is typically put in your pocket. If the value of an investment or the balance of an account goes up, then you would just increase the balance. However, revenue specifically identifies money that is paid back to you. So a quarterly dividend payout would be a form of revenue. You would take the payout amount and divide it by the number of months included in the payout. But again, the revenue number is usually 0. And the balance, of course, represents the total amount invested or being held in a particular account. The rate field is very specific. We're not asking if your stock jumped 50% in value. We'd be happy for you, but that's an aberration and cannot be predicted. This field is referring to a specific yields associated with an account. So a savings account might have an interest rate, a CD might have a yield, a fixed annuity might have a percentage associated with it. So this number refers to specific yields associated with each account. If there is no specific yield, then just leave the number at 0. The next category is for retirement accounts. It works the exact same way as the stocks and bonds section, except this is specifically referring to accounts that are designated as retirement accounts. So it could be a 401k, an IRA, Roth IRA, pension, something like that. Over to the far right side, you'll see a section for notes. This is for anything you believe we should know about the referenced account. If your income was going to change, if an account was overdrawn, if a portfolio was not performing well, if you've borrowed money against an asset, or money is earmarked for a specific purpose, all that information would go in this section. Also, there is a tips section to assist you in the preparation of your budget. The next category is for cash accounts. This section is for all liquid funds. So it could be a checking account, a savings account, a money market account, cash on hand, pillow money, or just money in a shoebox. All liquid funds should be listed. So if you have both a checking and a savings account with Wells Fargo, then the first item would be called Wells Fargo Checking. The second item would be called Wells Fargo Savings. Also, all accounts should be listed, not just your primary accounts. So if you have a separate business account, travel fund, emergency fund, college fund, or investment fund, make sure all of your accounts are listed. You'll want to list the institution holding the account type, and the purpose of the account. Also, if money in an account is earmarked, we'd want to know that too so we could better understand your goals and objectives. Also, you'll want to contact all of your banking institutions and find out the terms and conditions for using overdraft protection. In the Action Steps tab, we'll list specific questions you should ask. By the way, some of the action steps we go over today may seem a little trivial. However, many of these are defensive in nature. We want to help you be prepared for what happens when life happens. So if circumstances change, we need to be prepared. But beyond that, it is possible to find a debt weapon in the most unlikely of places. For example, an overdraft protection account can sometimes be used just like a line of credit. It's our responsibility to help you uncover all the tools you may have at your disposal. The next category is insurance. Now, we're not asking about auto insurance or health insurance or anything like that. This section is primarily for life insurance policies. There are 2 extra fields here to pay attention to: face value and cash value. Every insurance policy is going to have a face value. That's just a reference to the death benefit amount. So if you have $1 million policy, then the face value is $1 million. However, not every policy has a cash value. The cash value is a reference to money that can be taken out or borrowed against. Term life insurance policies usually don't have a cash value. So to determine if your policy has a cash value, you may need to contact your policy provider. The last category on this page is the other category. Now, we're not asking about gold pins and diamond earrings. Some members will put gold coin collections, antique collections, items of value, that type of thing. But that's not really what we're looking for either. We're looking for real property. that has no debt associated with it. So for example, a certificate of deposit could be listed here. If you have a vehicle that had a clean title and was paid in full, that would go in this section. Of course, if you had a house that had no mortgage on it, that was owned free and clear, that would go here as well. But if the property has debt associated with it, then it would go in the debts tab. This section is only for real property that has no debt associated with it. By the way, in some instances, it is possible to borrow against an asset, such as a 401k or a life insurance policy, or even against a CD. If that is the case for you, you'll want to gather all the terms and conditions for doing that. In some instances, you can only borrow for specific reasons, but here are a few things you should look into. First, get details about your particular account loans. Check out your summary plan description, or talk to your benefits office or 401k plan provider or an account administrator. Second, figure out how much you can borrow. In some instances, the government sets the limits on how much you can borrow. Generally, you're allowed to borrow no more than 50% of your 401k account value up to $50,000 maximum. However, government rules theoretically permit borrowing 100% of an account up to $10,000. But most plans don't allow this. They limit all loans to 50% of the account value for the sake of simplicity. Some plans also impose a minimum loan amount because administering a loan for only a few bucks isn't worth the hassle. Third, determine how much interest you have to pay. The interest you pay on a 401k loan is determined by your employer and must be a level that meets IRS requirements. It's usually the primary rate, the interest rate banks charge the most credit-worthy companies, plus 1 or 2 percentage points. In most plans, the interest you pay goes back into your account. So you're in the interesting position of being both the borrower and the lender. A whole life policy can have similar benefits as well. Fourth, find out the repayment period. You normally have to repay the loan within 5 years, but you can repay it faster if your plan permits. Your employer may permit a longer repayment period if you use the money for a home purchase. Lastly, ask about repayment methods. Employers usually require you to pay a loan through deductions from your paycheck. The loan repayments are taken out of your paycheck after taxes, not pre-tax like your original contributions. Then, when you eventually withdraw this money in retirement, you pay tax on it again. Borrowing from a whole life or universal life policy can be much easier, but many of the same questions still apply. Let's go over to the personal expenses tab. I will forewarn you that this is probably the most frustrating page in the entire budget. Let's face it, Walmart doesn't send you a monthly statement telling you how much you spent on food, kitchenware, or clothing. So tracking this information can be quite difficult. On this page, you'll see 3 general categories: household expenses, automobile expenses, and living expenses. In the business expenses tab, you'll see an additional category as well. I'm going to cover all of these categories at once since they function the same way. So the first field represents the name of the expense. However, on this page, many of the names will be uneditable. You can only rename an item that has the word other or number in it. The reason we went to this format is because we found that too many members were forgetting where their money was going. They would often leave out vices like alcohol, smoking, gambling, video games, and other expenses. In order to maximize your success in this coaching program, we have to be able to identify trends for all of your spending habits. We want you to have an increased awareness about where your money is going, because one of the most important things we can offer you is accountability. And that accountability is jeopardized if we don't have accurate numbers. So you'll see options like food, cell phone, homeowners insurance, gasoline, and many other everyday items. Now, the category itself doesn't matter quite as much to us. It's the distinction between items that is important. You can also have duplicates of any one type of item. For example, if you have multiple cell phones, you could list every cell phone separately. However, there is a general rule to follow. If it's billed together, list it together as one item. If it's billed separately, then list it separately. So for example, if you have bundled items, perhaps your water and trash are bundled, choose either one of those items and list the bundled amount. Similarly, if you have your internet, cable, and phone bills all in a bundle, select any one of those items. It doesn't matter to us. Then list the bundled amount. Next, there is a small box that allows you to select Y or N. It's important that we identify which expenses can be paid with a credit card. Now, we're not asking if you want to pay with a credit card. We're not asking if you currently pay with a credit card. We're not even asking if you can afford to pay with a credit card. We want to know if the vendors for each expense will accept credit card as a form of payment. The only exception to this rule is if a fee is charged for using a credit card. Obviously, we want to avoid fees unless it becomes absolutely necessary. But if the vendor will accept credit card as a form of payment without any fees, then put Y in the box. If they do not accept credit card or if they charge a fee, then just put an N in the box. The last column there is the amount column. Of course, it's important that the expenses be as accurate as possible. A running 3 to 6 month average is what we're looking for. So I would encourage you to pull out your statements and verify all of your expenses. As we go along in the coaching process, you will be reviewing the expenses regularly to verify accuracy. What we find is that when students review these expenses, there may be items missing, or perhaps you're spending a little more in one area while spending a little less in another. Or maybe you'll find something can be cut out entirely. Either way, a regular review of these accounts is going to be helpful. As mentioned before, all the numbers are based on monthly averages. Some of your expenses may not be paid on a monthly basis. For example, vehicle registration is usually paid once a year. So you would take the annual amount and divide that number by 12 to get a monthly amount. Similarly, if you have an expense that is paid quarterly or semi-annually, you would take the expense amount and divide it by the number of months included in that payment. Also, it's important that these numbers be as accurate as possible. In order for us to coach you effectively, we have to know that we're dealing with precise numbers. So don't just put 300 here or 1,000 there for every expense. This is also important when you list your taxes, benefits, and other deductions from your monthly income. We understand pennies may not be that important to you and they may not get you out of debt much faster, but it's still a good habit to get into, so be accurate. Now we understand that's not always possible. Like we said before, Walmart transactions aren't broken down by type. We understand that in some instances you may have to make some guesses, but when possible, be as accurate as possible. Let's take a look at the debt tab. The first category here is the mortgage category. All mortgages should go in this section. The first field is for the name of the lender. You can abbreviate here, so if you want to put B of A instead of Bank of America, that's fine. You'll also want to list the lien position if you have more than one mortgage on the same property. If the mortgage is with Bank of America and the second is with Chase, then the first line item would be B of A first, while the second line item would be Chase second. By the way, you'll want to identify the street name of the property as well. That's important for two reasons. First, we want to know which mortgages have liens on which properties. Second, we want to make sure there is no confusion while discussing these matters over the phone. Now, we don't need the complete address, so if you want to just put the street name or the housing development, then that would be fine. We do, however, need each property to have a unique identifier. The next field is the balance field. This is obviously referring to the total current amount owed on a mortgage. It's important that we have the most current numbers while we're on the phone together. You'll want to keep all of your balances up to date before each coaching session. Now, that doesn't mean you have to immediately update your balances every time you make a payment. That's not the point. You may want to begin using the system more often to track all of your numbers, but for our purposes, we only need you to make sure the numbers are up to date at least 24 hours prior to each coaching session. The next field is the value field. This is where the current estimated value of the property should go. We're not asking you to get an appraisal or anything like that. We don't want you to spend any money. But because of the current mortgage climate, it's very difficult to get a grasp on your equity position. So your coach will list some instructions on how to get an estimated value of your property. By the way, if you do have more than one mortgage on the same property, only the first mortgage will have a value. The second mortgage will have 0 as the current value. Otherwise, the system will think you have double the equity that you actually have. The next field is for the original loan amount. However, if you refinanced your mortgage, the original amount should be the starting loan amount from the last time you refinanced. By the way, it's also a good idea to put the starting month and year of the mortgage in the notes section. The next field is for monthly payments. Now, we're not asking what you want to pay, or what you currently pay, or even what you can afford to pay. We want to know the minimum monthly payment that each lender will accept in a given billing cycle. To find out what the minimum payment is, you'll want to look at your most recent billing statement. But there is an exception to the rule: negative or reverse mortgages. When you have a mortgage that is negatively amortized, the difference between your minimum payment option and your interest-only option is added to the balance of the loan. As a result, you're actually borrowing more money every month to support the cost of owning the property. Therefore, we always verify that the payment in the budget is at least the interest-only payment to accurately identify cash flow. The next field is under the due column. That's a reference to the day a payment is due. For example, most mortgages are due on the first day of the month, so you would list the first of the month in this section. The next column is the percent column. That's where you'll enter the interest rate associated with every account. Now, we do need all of your interest rates, so even if it's variable, put what the current rate is. The next category is for lines of credit. Now, a few minutes ago, I said that all mortgages should go in the mortgages section. But there is an exception to that rule: HELOCs, or home equity lines of credit. While they do have a lien on a property like a mortgage, they function like a line of credit. So we would put them in the lines of credit section. Now, there are several types of lines of credits out there. However, for our purposes, we've kept it simple. Either it's a HELOC or it's some other type of line of credit. Either it's secured by real estate or it's not. If it's secured by real estate, then you want to put the address or the street name of the property that it has a lien against, just like you did in the mortgage section. The only new field of note here is the limit. That just refers to the maximum amount that can be borrowed at any given point in time. The next category is for auto loans. Everything here has already been covered. But remember, this is not just for your everyday vehicle. This would include recreational vehicles, motorhomes, boats, and other vehicles that have liens against them. The next category is credit cards. Now, we're going to spend just a little bit of time here. First, all credit cards should be listed, even the ones with a zero balance. Basically, you should be asking yourself two questions. Is the credit card open, or is money owed? If the answer to either one of those questions is true, then you'll need to list it as a credit card. Second, all credit cards should be listed, not just major credit cards. So it doesn't have to have a logo of any of the big four credit card companies. It could be a Shell gas station card, Victoria's Secret, Kohl's, Macy's, Best Buy, or another department store card. Basically, if it can carry revolving debt like a credit card, it should be listed as a credit card. There are also two new fields to keep in mind: the close and the due columns. Every credit card statement has two dates associated with it. The first is the due date. That one is pretty self-explanatory. It's just the day a payment is due. However, the close date is not always quite so obvious. Sometimes it's called the statement date or the statement closing date, but it all refers to the same thing. It's also the last day for transactions to be added to the billing cycle, the date on which a statement is generated, and the date the cycle's finance charges are added to the balance. The easiest way to understand this is to think of the last day of the billing cycle. For example, if you have a statement that covers the time frame from the 15th of last month through the 14th of this month, then that last day of the billing cycle, the 14th, is the close date. The reason that this is important is because whatever balance you owe on that day is the balance that gets reported to the credit bureaus. So if you wanted to temporarily manipulate credit scores, you could do so by manipulating what was owed on a particular day. The next category is other debt. This category is very important. It can include other traditional types of debt. If you have any jewelry loans, student loans, furniture loans, or any other types of installment loans, you would list them in this section. But it can be for non-traditional debts as well. If you owe money to the IRS, then that would go in this section. If you owe money to a friend, that would go here. If you have any judgments, accounts and collections, medical bills, those would all go here as well. We need to pay special attention to all of these. So it's very important that we understand all the details for each of these debts. Over to the far right again, you find a section for notes. This is for anything you believe we should know about the above referenced accounts. For example, if a balloon payment is due, if an interest rate is going to adjust, if an introductory period is going to end, if you're going to be sued or were just served notice, if you're behind on an account, if a lender has offered some type of resolution or change in terms, anything you believe we need to know about your debts, put that information in this section. The last section we'll discuss today is the Action Steps tab. When your coach takes notes for you, they usually put those in this page. This is the start of your written plan. Every assignment we give you will be listed here in this page here. In some instances, there will be suggestions or recommendations. In other instances, there will be necessary steps that must be completed to proceed in the coaching process. You'll want to assume that every step is required unless your coach specifically tells you otherwise. We'll include words like suggestion or recommendation when necessary to make that distinction more clear. Every action step will need a result, even the suggestions. It does not matter how trivial an action step may appear. It's important to see the results to better design a strategy for you moving forward. You'll enter the notes in the results section. So for example, the first action step here is email your credit report. After sending that to your coach, you'll simply type done, complete, or finished. That will let us know that you've completed the assignment. Now in some instances, typing done, complete, or finished will be enough. But in most instances, you'll want to enter more information. If we ask you to gather information, you'll want to gather the details here. If there are terms, conditions, questions, concerns, problems, clarifications, was it successful or not successful, any and all information relating to a specific action step, you'll want to put that information in here. Try to be as detailed as possible in each action step so we can be better prepared for each coaching session. Understand, this is the most important page in the entire budget. This is where the blueprint is laid out. Focus your attention on this page before each coaching session. Let me encourage you, don't wait until the day before you schedule the coaching session to complete the action steps. You won't be done in time. If you have 15 minutes to spare throughout your week, try to complete an action step or two, even just a portion of an action step. But you don't want to get them all done at once. With that in mind, all action steps and numbers in the budget must be completed at least 24 hours before your next coaching session. VIP takes your finances very seriously, and your coach will always be prepared for your session. But coaches are in and out of sessions throughout the day. So in order to give your coach time to prepare for sessions and think through strategies, scenarios, in order to give him time to do research or consult with other professionals, we have to require that the information be submitted 24 hours prior to each coaching session. So if we look in your budget and see that the action steps are not complete 24 hours prior to your session, we'll simply give you a call and have you reschedule your coaching session. But as long as you don't wait until the last minute, that shouldn't be a problem. One last thing before I let you go today. Some members may need to have multiple budgets. For example, if you have a business that has its own debt, income, and expenses, then you may want to split that up into multiple budgets. Your coach will be of help if that's the case. Just know that this is not a requirement for your next session. We will coach you on as many budgets as necessary as long as they are your budgets. This is all a part of your coaching program without any additional fees. But remember, your priority right now is simply your general budget. Well, I know I've gone quite long today. Feel free to watch this again if you think you need to review the information again. Between now and your next coaching session, you'll want to complete the action steps provided for you in the last page of your budget and detail the results next to each step. Also, please keep track of your questions or concerns so that I can address them in your coaching session. You may email me directly with any questions. Well, it was great spending time with you today. I look forward to getting to know more about you and learning more about your goals and objectives in your next session. And of course, we look forward to providing the guidance you need to help you reach your financial goals. Don't forget that as a coaching member, your tuition cost can be rebated over time every time you refer a new member. So we are always excited to help your family and friends get further financially as well. We are never too busy for your referrals. So until we speak during your next session, make it a great day and take care.